Shadows over Wall Street. Wall Street, the heartbeat of global finance. Every second, millions of dollars exchange hands. Every trade, every number, every gain and loss represents a trust placed in the system. But sometimes, beneath the hum of servers and the glow of trading screens, that trust hides something far darker. This story begins in Midtown Manhattan, 2021. A whistleblower's encrypted email arrives at the Securities and Exchange Commission. Check the trades on Borealis Capital between May and July. The profits aren't real, and the audit trails have been rewritten. No name, no return address, just that single chilling message. Within days, Agent Rebecca Miles, a forensic auditor known for her precision and persistence, is called in. She had handled complex fraud before, offshore laundering, Ponzi structures, insider leaks. But this case was different. Borealis Capital wasn't a fringe broker. It was a respected mid-tier investment house managing over $12 billion in assets. When Rebecca and her team began analyzing transaction data, they noticed something strange. Trade logs for specific securities showed profit margins that didn't match any market movement. The trades looked clean, timestamps aligned, positions reconciled, but when traced against exchange records, there was a subtle inconsistency. Milliseconds of timing that didn't exist in the exchange's official server clocks. It was as if Borealis had edited time itself. Rebecca's team worked from a secured lab inside the SEC building, multiple monitors glowing with endless columns of data. Forensic coders began reconstructing deleted transactions using blockchain residuals and off-site server backups. They noticed trades routing through 3 small shell firms registered in Delaware: Greenleaf Holdings, Aurora Beta LLC, and Mistral Group Inc. All had the same registered agent, and none had declared tax filings for 3 years. The deeper they dug, the clearer it became. Borealis wasn't just fabricating numbers. It was building a phantom portfolio, a self-inflated balance sheet to attract new investors and inflate executive bonuses. But the illusion had a design. When Miles subpoenaed Borealis' external auditor, Caldwell and Trent LLP, she found that the audit firm's lead partner, David Trent, had quietly resigned just 3 months earlier and vanished overseas. His last audit report bore a digital signature from an IP address traced to an abandoned warehouse in Brooklyn. The forensic team drove there one rainy evening. Inside, the place was empty except for a rusted desk, old computers, and dozens of shredded documents. Beneath the dust, a single USB stick lay inside a sealed envelope. On it were 3 files, each labeled with just a date. When decrypted, the files contained mirrored accounting ledgers from Borealis private servers, unedited versions. They showed something horrifying. Over $1.6 billion in fake gains over a 14-month period. Those fabricated profits had fueled executive bonuses, market trust, and a stock price that soared nearly 300%. Rebecca took the findings to Assistant U.S. Attorney Michael Delaney, a man both respected and feared for his relentless prosecution of white-collar crimes. Together, they formed a joint task force, the Forensic Financial Crimes Division, partnering with the FBI's cyber unit. Through late nights and coffee-stained files, they pieced together the puzzle. Borealis CFO, Ethan Crow, had created the shell companies himself years earlier during his tenure as a systems architect. He built hidden backdoors into their transaction management system, allowing him to duplicate legitimate trade IDs and reassign them to fake entities. The fraud ran deep, not just through the company, but the exchange itself. Some internal compliance officers had been bribed to look away when discrepancies were flagged. By January 2022, investigators had enough to stage a covert raid. At precisely 6:30 a.m., federal agents entered Borealis headquarters on Lexington Avenue. Laptops seized, emails cloned, paper files locked down. Executives watched in disbelief as uniformed officers surrounded the floor. "What's this about?" Crow demanded. "Fraud, manipulation, and conspiracy." Agent Miles replied, showing him the warrant. He smirked, thinking the firm's lawyers could spin it away. But when Rebecca placed a photo on the desk, a printout of the hidden ledgers recovered from the USB, his expression faltered. "Who else knows?" he whispered. "Enough," she said, "and soon everyone will." As the case went public, the media called it the Borealis Mirage. Stock markets shook, investors panicked, and across trading floors, brokers whispered that this might just be the first domino. But even as the investigation gained traction, someone inside the system was working to bury it. One night, Rebecca received an anonymous call from a block number. "You're chasing ghosts," the voice said. "Borealis isn't the only one. Look at the exchange board minutes, March 9th. The call ended. She traced the board records. On that date, a subcommittee had quietly approved a data synchronization patch to the trading timestamp servers, proposed by an external vendor linked to Mistral Group. It wasn't just Borealis. The fraud had seeped into the infrastructure of Wall Street itself. Weeks later, Rebecca's secure office was broken into. Nothing stolen, except her laptop and a stack of unfiled reports. It was clear someone with power didn't want this truth out. Still, the forensic trail spoke louder than threats. Using reconstructed blockchain verification, her team proved that over 200 microtransactions were ghost-traded, meaning no actual stock changed hands, yet millions were declared as profits. The case reached federal court in the summer of 2023. The prosecution presented digital reconstructions on massive LED screens, showing in real time how Borealis fake trades inflated their market value. Crow sat silently, hands clasped as his former employees testified, some tearfully admitting they falsified audit entries under pressure. When the defense tried to dismiss the digital evidence as speculative, Rebecca herself was called to the stand. She explained, line by line, how every transaction left a forensic signature, metadata, hash validation, residual timestamp mismatches, impossible to fake. By the end of her testimony, the courtroom was silent. After a 14-week trial, the verdict was unanimous. Guilty on 42 counts of fraud, conspiracy, and obstruction of justice. Crow was sentenced to 25 years in federal prison. 2 exchange officials and 1 former audit partner also received convictions, but the story didn't end there. In a follow-up investigation, Rebecca discovered that a portion of the embezzled funds, nearly $200 million, had been funneled through a charitable trust in the Cayman Islands. The supposed charity was later traced to a former senator's campaign fund. Justice had triumphed, but also revealed how deeply corruption had entwined itself into systems built on trust. Today, the Borealis case is taught in forensic accounting programs worldwide as a reminder that every system, no matter how sophisticated, can be breached from within. Rebecca Miles eventually retired from the SEC, consulting for global regulators. Her work led to the adoption of real-time forensic audit systems, algorithms that flag micro-discrepancies before they multiply into billion-dollar deceptions. "Numbers don't lie," she once said, "but people do. And our job is to listen when the numbers start whispering." Moral and call to action. No fraud starts big. Every deception begins as a small compromise, a temporary adjustment, a one-time fix. When accountability is ignored, corruption becomes culture. The moral is clear. Integrity is not just compliance. It is a foundation of trust. In finance, as in life, transparency is the truest currency.